Alright, hello, and welcome to Camel Finance. I'm your boy Camel, and got a mixed bag today. Let's jump straight into it. BlackRock economists are telling the financial advisors that the next Fed meeting will include pivot language. I've shown this before, I'll likely show it again one more time tomorrow. We are approaching FOMC Tuesday and Wednesday this week. We all know about this. Hopefully there's pivot language in there. That remains to be seen. Goldman Sachs has raised the Fed rate outlook and sees a peak at 5% in March. So this is completely contrary to the idea of seeing pivot language. Nobody really knows how this is going to go. Some people, JT here, says quit worrying about the Fed meeting. Let him handle that. His personal opinion is it won't matter what happens next. And I'm starting to see more and more of these pop up on my Twitter feed. Perhaps this is confirmation bias, but I've seen quite a few people say that whether they pivot or not, we're still going to get a rally. So I wouldn't be overly surprised by that, although it was definitely not my primary thesis. Puts and short covering could certainly drive this market higher. There is record bearish sentiment as well that could also drive this market higher. A lot of people think the top is in short term now and that we're going to roll over from the recent rally we've had in equities. That remains to be seen. A lot of people still championing one more drop down in Bitcoin and crypto, 10, 12, 16k, pick a silly number. I don't think we see it, and I'll prove that to you in just a moment. Russia has just passed a new bill to legalize Bitcoin mining, and cross-border Bitcoin use has been filed with Parliament. Brings back that question, are Russia adding hash rate? Is one of the reasons we've seen a spike in hash rate for the Bitcoin network, because Russia has been adding hash rate, because Russia has been taking a bigger stake in the mining of the Bitcoin network. And are they doing this because they want to protect their investment, because they're about to start pricing their commodities in Bitcoin? Remember, they've been telling us that they might do this in the mainstream media for the most of this year. Whether that is the case or not, this is certainly bullish for Bitcoin. And speaking of mining, this is gold mining right here. As you can see, not a good look for the environment. This is Bitcoin mining. As you can see, much greener, much better. It's only a matter of time before people work this out. The inflation worldwide is still a problem. We've just seen Italy's inflation jump from 9.4 to 12.8% in October, which is the highest since 1996. We've also got the Eurozone inflation setting new records. Prices have jumped by a record 10.7% in October, far exceeding the 10.3% median estimate. Core inflation accelerated to 5% as well, a fresh record. So this is not a good look. Inflation does not seem to be cooling off as of yet. And even if it is cooling off, it's still a massive problem. Look at the annual inflation worldwide, okay? You can see here 83% in Turkey and in Argentina. Here in the UK, we are over 10%. They are still over 8% in the US. And of course, the real world numbers are significantly higher, likely 2 or 3 times higher than any of these prints here. So inflation is not going away. Things like gold, silver, and Bitcoin, and even equities, I think in the short term, are going to benefit. We're going to see this inflation transfer to assets again. It's been a while since they have done. And speaking of inflation, I saw this and I thought this was interesting. It's going to lead me nicely into my next point. Double top inflation is now the most likely scenario. You can see here in orange the US inflation, and the black is the 1974 to 1984 experience when they had a double dip in inflation. Why am I pointing this out? Why was this very interesting to me? Because all the other data is pointing to having seen peak CPI already, and that we are likely, it's much more likely in my opinion, and at least according to the data I've seen and been showing on this channel for a while, that CPI is most likely to fall off a cliff in the near future. I don't really foresee CPI spiking out of here. Why this scenario of this sort of double dip is particularly interesting to me is because, as you know, I've been championing this. These arrows will make sense in just a minute. I've been championing this scenario for the past month and a half, 2 months, whatever it's been. As of yesterday's video, I added some notes, and in amongst these notes, I said that we were going to crash down if this scenario to play out to new lows, and then the Fed will launch record quantitative easing. I said 10 or 20 trillion, perhaps even more. And of course, this would be very highly inflationary. So going back to this chart, you could see that if we were to get this big blow-off move, like I've been calling for into the earlier next year, then have this deflationary bust for the second half of next year into the following year, that would take us to 2024, right? At 2024, assuming I'm right about this printing coming back, that would of course lag by 12 to 18 months. And then we would start to see this inflation really start to take hold. So this scenario here, this double dip, would actually make perfect sense and perfectly fits this scenario here. So I just thought that was interesting. Whilst I'm here, let me explain these arrows. I had a comment and someone was asking me, can I talk a bit more about my theory or my thesis for why I think Congress is likely to be banned from owning stocks coming up? So to do that, I've marked let's first take a look at these 3 red arrows here. Okay, these correspond with these headlines. Fed presidents are selling individual stock holdings to address this ethics concern. This ethics concern being, should Fed insiders be allowed to trade stocks? Note the date, the 9th of September. That is shown right here by this red arrow. The Fed is going to ban policymakers from owning individual stocks, restricting trading following controversy. This is October 21st, 2021, which is in line with this second arrow, okay? And then the third heading I've got here, on the 18th of February, the Fed finally approves the rules banning its officials from trading stocks, bonds, and also cryptocurrencies. As you can see here, that is the third red arrow. With all that said, we know that they were priming it in the media on the first 2 arrows, and by the time we get to this third arrow, they are fully banned and out of the market. Between them first talking about being banned from owning stocks as Fed insiders for ethics reasons, and them actually being banned, zooming out, this actually will show you that they let all of the Fed insiders out of the market at the top, right? You can see that there. They are completely let out at the top, as shown by this green box here. So the purple arrows now correspond to the following tabs. January 25th, why members of Congress, this time instead of the Fed insiders, should not trade stocks. Then we've got, should members of Congress be banned from trading stocks? In February, go over to the chart, no surprises, January and February. On October 6th of 2022, they were telling us that the Democrats and Republicans make millions trading stocks and companies and that Congress oversees. The 16th of September, they were telling us that they're going to delay it and it's not going to happen before the election. Okay, again, you can see that here. So they're telling us here's the 16th of September, roughly 6th of October. So notice that up here they start to talk about should we ban Congress from owning stocks as well as the Fed. But then by the time they're due to ban it, we are now making new lows and we are significantly off the highs. And you notice that when we get down there, they start talking about it's not going to happen before the election and saying things like they told reporters that the legislation was on hold at least until after the balloting in November. We get down to the lows and they just decide we're going to push it back until after November. So based on all of this, based on history telling us they let the Fed members out of the top and they were due to ban Congress down here, but then decided when we got to the lows that no, actually we're going to knock it back, we're going to delay it, I would not be at all surprised to see them pump this market up and then let Congress out. Now, just because I'm assuming there's going to be a blow off top move to finish this, a grand finale, doesn't mean I'm right. We may well see the stock market just pull back up into this same sort of region and then them let Congress out in this sort of region here. If that's the case, then we will have to entertain exiting the market at that point. But I do think that one of the best markers for the end of this actual super cycle that has been spanning for decades and decades and decades when you zoom out, just like the prior top, was when they let the Fed members out. So that's my theory. That's my thesis. I'm sticking with it until it's invalidated. Invalidation would come from rolling over and taking out the lows. Then something completely different is on the table. But all the while, we continue to melt up, particularly if we get some sort of dovish pivot from the Fed over the coming meeting this week, and particularly if this just continues to melt higher, regardless of the Fed meeting, then this is certainly in play until it isn't. I hope that sufficiently elaborates on my thinking. I hope you can understand where I'm coming from now. If you have any comments or questions on this, if you think this is absolutely ludicrous, then throw it down in the comments. I'd love to hear from you. So from one crazy idea to another, and although he likes the idea of trading non-fungible tokens that represent collectible JPEGs, he's much more interested in trading single-family homes as NFTs. Stay tuned to the biggest disruption to the real estate industry ever, as NFTs equal deeds for your house. This is something I could actually get behind. This is something I would be interested in trading. I have never bought an NFT before. I've never been interested in holding an NFT or a JPEG or any of that sort of thing. However, we are seeing live this move to the tokenization of everything, including real estate and houses. And I wonder if the way that Bitcoin cuts out the banks and the middleman and you can transact peer-to-peer, I wonder if that can be done with NFTs and houses. I wonder if you need to even pay the estate agent fees and the legal fees. And I wonder if you could simply transfer a house, an asset, as an NFT peer-to-peer without the need for any middleman interference. That would certainly reduce friction. Back to Bitcoin now. Measured from the drop below realized price, Bitcoin has now surpassed the duration of the 2018 cycle bottom formation. Said another way, We spent 133 days in 2018 forming a bottom, and we have now spent more than 133 days forming the 2022 bottom, meaning enough time has elapsed for us to emerge out of here. I still think we are due one more pullback into this cycle low. We'll get to the charts in just a minute, but this is a pretty good look. This is shaping up a lot like the 2018 bottom. As you can see here, one base, two base, three bases, then one on the way down and the bottom, and then we go. And here we have 1, 2, 3, one on the way down and one on the bottom. I think all we need now is a little pullback into that cycle low, and then it's actually time to fly. I saw this and I just want to caution against this. Again, I will continue to caution against this sort of thinking. This is looking left. This is looking back in time and saying history will do the exact same thing. I don't think this is the case. I would love for this to be the case. If this is the case, the longer it goes, the higher the top's going to be. But I think this is simply too easy. As I've said on this channel multiple times, I think just looking left and saying, well, 1 year down, 3 years up, 1 year down, 3 years up, I just think that is far, far, far too easy. I think this is what the retail and the noobs, the new people entering the space, I think that's what they're going to be looking at. They're going to be assuming. I'm even seeing people that have been in the market for a very long time championing this idea of the repeating 4-year cycle. I would love to see it. I'm not saying I don't want this. This would be much better. Like I said, we'll get a much higher top if this is the case. However, like I keep saying on this channel, caution against this way of thinking. I think this would be easy, but I also think this is too easy. I think we go 1 year up and 3 years down this time around. That remains to be seen. Let's first focus on getting out of here. But remember, be open to all possibilities, because just simply saying, oh, we're going to leave here and go up for 3 years, I just don't see it personally. There's no technical analysis needed with this chart. As you can see, looks remarkably like we've gone sideways enough time to now start emerging from this. We've got the right colored dots to say that we could leave this bear market zone. That remains to be seen. But all the signs are starting to look like we have a good chance of actually forming a bottom here. The retail investors continue to make the same mistakes every single time. This is a historic level of bearishness, and it is confirming the bottom is in. This is for equity markets. You can see here, whenever the market declines, investors turn really, really bearish, and they are historically bearish at this moment in time. Bonds have been completely destroyed, but they now present us with a never seen before opportunity. I know there's 1 or 2 bond traders that watch this channel. Personally, I don't really trade bonds, but like I said, I know 1 or 2 of you do. If you have anything to say about bonds, let me know. If you have anything to contribute for bonds, I would love to hear it. Game of Trades thinks they're now presenting us with a never seen before opportunity. I'm not sure that I agree with this. I think the equities and the crypto is where the real opportunity lies. However, I do, at the same time, having said that, champion the idea that the yields are going to come off, and that of course means that bond prices are likely to rise here. Is this a big opportunity for bond traders? Quite possibly. Like I said, if you're a bond trader and you have something to contribute, I'd love to hear it. Throw it down in the comments. Let's get into the charts. The dollar is doing what I thought it would do, isn't it? It's doing what I said it would do. We are, of course, getting a reaction off this line, which only makes sense given how much support it has been going back over a year. So a little bounce up, maybe form a lower high, come down to test, and then break. That kind of makes perfect sense to me, as I've been saying over and over again. Of course, that remains to be seen at this point. The chart of truth, still hanging up. I've been saying maybe this is what we're going to do, waddle our way up and then break down. Again, that remains to be seen. A lot of this will be catalyzed by the Fed meeting this week, of course. S&P 500, I checked the futures are coming off, so are we actually going to get the gift from God? Are we going to get this final dip down, this retest, and then we can buy that? In case we don't, we're along the NASDAQ, and we will be continuing to push this trade to the upside, looking to add exposure via the S&P 500. I expect volatility this week, and here's the Dow, but again, as I've said before, I think any sort of pullback and then a breakout will become a longable trade idea from wherever these lows form, probably a bit lower than that to be honest. Targeting new highs. So that is one trade idea if you're not in already. FTSE 100, I really want it to roll over. Like I said, might have to let this one go. Happy to let them go. Can't take every trade, can't get everything right. If it does dive down lower though, I will be entertaining longs from down here, as I keep saying. Coinbase MicroStrategy, let's see what happens, right? We know that this cycle low is due for Bitcoin pretty soon. We expect this low to form on the 6th of November, plus or minus 6 days. Same is true of MicroStrategy. I'm kind of expecting it to get a decent pullback here. That's what I'm hoping for. Otherwise, we might have to start scaling into this early. This, again, Riot looking inherently bullish. Look at this. Breakout, retest, trying to resume. I'd love to see this dive down one more time before we can go. That remains to be seen. Of course, I can't force the market to do that. The same is true of Marathon. Look, this looks like a very nice little bull flag setup, but I think likely we've got to drop down into this cycle low for Bitcoin, which I will jump to now. Here's Bitcoin, still refusing to dip, but still quite early as well. If I grab this here and measure out. We are on day 54, so we are just entering the timing band. Day 60, perfect day 60 low would be on the 6th of November, and of course it could come up to 6 days after that, which would be the 12th of November, but I do still expect a drop into this cycle low, a nice swing, and then I think it's time to get long and strong. The same is true of Ethereum. Ethereum, look at this, breakout retest, trying to resume, not out of the woods yet. Again, it wouldn't surprise me if we can just sort of waddle down and form a swing. That remains to be seen at this point. Here's XRP, still doing a whole lot of nothing. Looks like it wants to touch the top of this red line. That remains to be seen. I wouldn't be surprised if we get a touch of this line as Bitcoin forms its cycle low, and then we can go. I remain long and strong, continue to push. MATIC still kind of ranging sideways. I would think if this doesn't make a new high soon, a new local high, then this is going to drop down into that cycle low. But that's fine as well. We have been expecting that. If you've been watching the channel, you'll know. Zcash, same story. I think we're going to drop into this cycle low and go. So still looking for that. Here's gold. Gold continuing what I hope is a move down towards this cycle low. So continuing to push this short. Apple, again, longer term account, long and strong, continue to push. I expect volatility for the first half of this week. And then once we know what the Fed's going to do, that should give us direction. And the same is true of Tesla. So again, wouldn't be surprised to see a bit of chop before we can go, but I do expect it to go. If you found value here today, I'd appreciate it if you could drop a like on the channel. Subscribe if you're not already. Turn the notifications on if you want to see me enter these trades over the coming week. Perhaps 2 weeks for some of them. I will make sure I update as soon as I make any kind of changes to my trades or positioning via YouTube. So make sure you're subscribed if you want to see that. In the meantime, trade safe out there. Don't give the market makers your stops for the first couple of days this week. And all the best from me. Take care. Cheers. Bye.